I know that it's been quite a while, but we're back now. Gonna try once again to do videos on the regular. Things have been crazy. As some of you know, I work in logistics and been working 7 days a week since about mid-February. And free time is very hard to find, and any free time I get, I'm spending mostly with the family. But I decided to stay awake a little bit later to film this. And here we go. So today we're going to be talking about options trading, some of the winners and losers that I have made in the past couple of weeks. Before we get going, if you need to first subscribe, go ahead and subscribe to the channel and hit that like button if you even haven't watched the video yet, because I know you're going to like it. And if you need to sign up, there's going to be links in the description for Robinhood and Webull. Sign up, get you for some free stocks. Now, moving on, let's take a look at the 3-month chart here. As you can see, did have a pretty good jump here, and right here as well. If I look on the graph right here, I'm at negative 28.25. I did take some money out at the peak. It's showing here about 64.72. At the peak, it was actually a little over 11,000 is what I was at, but I took some money out, paid off some things, just to get some of that taken care of. I'm still in the green overall, but not nearly as much as I was, and I will show you that shortly. As you can see, 1-month chart. Here's the big jump right here, and let's take a look how the last week has gone. Not so good. So August 17th here, about $3,200, and now I'm down to 91. So what happened? Well, I have right here to thank for this previous drop, or for this drop for this week. Got a Walmart $140 call. This was our earnings play, down a 99.32%. Market value $20, basically worthless. It expires today. I was doing an earnings play for Walmart. I figured that they were going to be just like every other retailer, whether it be the Amazon or Alibaba or Target, and that they were going to beat earnings expectations, which, to be fair, they did pretty significantly, and their online sales were up over 90% for the quarter, but it did not matter. Walmart is not big tech, so they were destined to not do well, in my humble opinion. You have Amazon, Tesla, Apple, Microsoft, all those jumping up to new records damn near every day. So basically, I should have known better. Hindsight 2020. But even with this loss, I'm still in the green, so I'm still okay, and we'll be looking out for the next one. So I'm gonna close that out, and I'm gonna go over some of the plays that I've made in the last few weeks. I'm not gonna go over every single one, because there are a couple small ones I made here and there where I either sold really quick at a little bit of a loss or a little bit of a gain, just depending on what the market was doing. So, as you can see, first off, this Microsoft buy and sell right here. Lost a little bit of money on that contract. I'm not too bummed out about it. It was just a little bit. Now here's one of the big ones. FedEx. I was playing earnings. As you know, I work at FedEx. Our volume has not only gone up significantly, it's almost doubled in many ways. Same with UPS. Same with Amazon. Even the post office is delivering more, but we're not going to talk about the post office. Anyway, so I had a call, 139 strike, $710. And keep that in the back of your mind here. Here you had a little Facebook, made a little bit of money here, nothing too crazy. But here's the FedEx sell right here, jumped all the way up to $2,055. We blew away earnings, obviously, and we just keep getting more and more volume done every single day. So if you are interested in options, have that in the back of your mind that these could be good plays in the future. This one's just funny. I bought and sold 6 days later for $15. I don't know what I was doing, but it's whatever. I wish there was a way to take these out. I'm kind of indecisive when it comes to options, but that's okay. So here was just a random buy, 30-30 call strike price on the 6th. I saw where they had pre-market. They were up like 3%, and it just seemed to keep going. So I decided to see if I could ride the wave a little bit that day. As you can see, it worked out. I sold the same day for about $1,500 in profit. I'll take that, and it was pretty nice. Here we bought a call for UPS to play their earnings, 115 strike, 890 for that one. And then I bought Apple as well, July 8th, on July 8th, 380 strike price, 720, sold on the 13th, almost double my money, so not too bad there. Bought 2 more Apple contracts, $400 strike for 1548. As you can see, yeah, did not work out. Anyway, actually, I don't even think I sold there. Yeah, I sold for $6. Netflix. This is the first one that really, really hurt. As you can see, one contract, $2,600, was playing their earnings, and really that was a good call to make because they had more subscriber growth than they did. They just than they were projecting. They just did not hit their EPS that they were looking for, and so it shot down horribly, and I lost all that. Spoiler alert. UPS sell here. I sold 2 contracts for 1040. Just taking another look. 890 was the buy. Nothing too crazy on that one just yet. Microsoft buy here, 878. I can't remember if this was actually an earnings play or not, but we'll see more of that in a minute. Actually, this was the earnings call. I'm sorry, I got confused there. Ignore this. I just had a couple of dollars. I just had a little bit to waste, so I just kind of went out there on this. But if I had to put the expiration date out a little further, I might be in some money here. UPS $125 call, $738. Next day, earnings shot through the roof. Sold $3,700. And this one, a lot of people on Facebook were giving me a flack about this. So, got 2 contracts, $382 strike price, 3 contracts, $385 for their earnings. People were saying that they weren't going to hit earnings, but just with all their cloud services, Apple TV, and their phone sales, an article that came out a couple days before talking about how their phone sales in China had skyrocketed. So I thought that it was going to work out pretty well, and it turns out that it did. So sold the 382 and 50 cents calls the next day for $4,880, and then that same day sold the 385 strike for $6,345. So that's where my big jump in money came from. So it evened out to be, like I said, a little over $11,000. Now, here's where some silly things happen. Google, $1,500 strike. I bought it on the 31st for $3,600. Sold about a week later for $300. Honestly, looking back on that, I feel like I knew better, and yeah, it was not a good decision. I felt like I was invincible at that point, and let it get to my head, and I paid for it just a little bit. Neo, I decided to play their earnings. I thought that I was going to do really well. They did beat their estimates, but they kind of shot down pretty drastically. Luckily, another thing, for about the first minute of the market, there was some lag with the brokerages, and luckily I was able to sell for a little bit of a loss, just a little bit. But if I had held, I would have lost all of it. So at least I was able to get out at the end. Apple, $460 call, $22.75 is what I paid. Sold it at $9.90. Lost a good amount there, but you win and you lose some. I thought I could keep riding the Apple wave, but the expiration was not far out enough for me to profit from it, and so took a beat on that. JD played earnings for them. At first I was worried because they were down, even though they beat expectations. It went down a good amount. Luckily I held through, made about $900, so I'm happy with that. And then here, of course, is the one that I just showed. About to lose all that for Walmart, and that's where we are. So beat down pretty heavily, but like I said, I'm putting money aside out of every check just to do some options. So this is not money that I am anyway going to be destitute over losing. And I hope all of you are trading the exact same way, whether you're doing options, day trading, or just regular investing. But what I'm going to do in the future. So one thing I think I'm going to do is buy heavily into Apple after the stock split. Um, with how cheap it's going to be, I feel like now is a really good time to jump in. I might go into Tesla as well. It just depends. I feel like for long term, based on their history, Apple is going to be the way to go. Well, we'll see what happens. Um, and since, of course, there's fractional sharing, might buy into Amazon. We'll see what happens there. Then I'm going to work on buying into some ETFs in this account, not only in my Roth IRA, but going to look out for those. Then another stock that I am going to start dipping some money into is Workhorse. Coming from the perspective that they make delivery vans, electric delivery vans, that could be used for FedEx, UPS, and other delivery companies like that, and the post office, for example. I feel like they're one huge contract away from skyrocketing even more, 500% in the last 3 months. So if you got in on that whenever they made that leap, good for you. I wish it was me, but you live and you learn. This would be a win for any large company who wanted to cut out gasoline. But that's all for this video. I hope you enjoyed it. Just take some. If you take away anything from this, just do not think you're invincible with options or investing in general, because the market will chew you up and spit you out. Do not invest money that you are not comfortable with losing. Yes, every loss stings, some more than others, case in point, but you gotta make sure that you can still survive day to day if you lose some money. So, hope you all enjoyed. Be on the lookout for more videos. I'm going to stay committed this time, and be sure to subscribe and drop a like. If you have any big trades that you wish to share, leave in the comments below, and we'll see you guys in the next video.